Good afternoon. Let's do some business. In fact, we're doing it live right here, doing more at 4 weekday afternoons. We get right down to business with the news-driven hour right after Ben Shapiro and just before the 790 KBC News Blitz with Randy Wang at 5. Mottek On Money live on the air on 790 KBC, streaming live online worldwide at kbc.com, and you're on demand. Mottek On Money podcast, kbc.com, Apple, iTunes, YouTube, and all of your favorite podcast platforms. Stocks finishing the week lower today. In fact, we just wrapped up the worst week for the S&P 500 since early September. Looks like the Fed has spoiled the party this week. Doubts about a December interest rate cut by the Federal Reserve based on some recent comments helping to interrupt the post-election rally. Latest reports on inflation this week and retail sales, along with the comments from senior Fed officials, including the Fed Chair Jerome Powell, about there being no rush to cut benchmark interest rates, weighing on investors this week. Investors also casting a wary eye toward the Treasury market, with the yield in the 10-year note hitting a 6-month high earlier today. The yield in the 10-year note now at 4.44%. Bloom Energy stock was one of the big gainers today, skyrocketing at nearly 60%. Oil futures, meanwhile, ending lower today, with prices settling at their lowest seen in a couple of months and down nearly 5% for the week. Gold also taking a hit this week, the lowest we've seen in more than 2 months, and a weekly loss of nearly 5%, the largest such loss in more than 3 years. Stocks of companies that make or are developing the new class of weight loss and diabetes management drugs are sharply lower today after President-elect Donald Trump named Robert F. Kennedy Jr. as picked to head the Department of Health and Human Services. President-elect Trump announcing that North Dakota Governor Doug Burgum, the President's choice to head the Interior Department, will also lead a newly created National Energy Council that will try to establish U.S. energy dominance around the world. Everyone's waiting for some more big announcements. President-elect Trump has rolled out his selections for a number of key administration roles this week, has yet to announce his pick for Treasury Secretary. Its top choices, according to MarketWatch, appear to include hedge fund manager Scott Bessent and Cantor Fitzgerald Chief Executive Howard Lutnick. Other names remain in the mix, including the possibility of Larry Kudlow. Also, Robert Lighthizer, known for embracing tariffs while serving as U.S. Trade Representative in the first Trump administration. Larry Kudlow, of course, previously held the head of a National Economic Council, and he actually might be considered for National Economic Council Director, possibly Treasury Secretary, that according to the Wall Street Journal. What does the second Trump administration mean for electric vehicles and gas-powered vehicles? His presidency is expected to reshape the entire auto industry. Michigan voted for President Trump, by the way. California, meanwhile, is set to end the sale of motor homes. We'll get an update on that this afternoon from Lauren Fix, our go-to car expert, editor-in-chief of Car Coach, and the co-host of the Total Car Score podcast. Pink's Hot Dogs, the most famous hot dog place in Los Angeles, celebrating a big anniversary. The iconic hot dog stand, a must-see for visitors and locals alike. And we'll be speaking about that with Richard Pink later this hour. Also, Pink's wonderful philanthropy as well. We'll talk about it. We'll talk about it with the one and only Richard Pink. But first, on your money, the markets, the economy, crypto too, the whole works now. Joining us live, investment expert BRYAN Perry, Chief Investment Strategist and Portfolio Manager at Mint Asset Management at mintassetmanagement.com. Also author of the 25% Cash Machine. BRYAN Perry, thank you very much for taking the call here this afternoon.
Always great to be with you, Frank, and thanks for having me here. The post-election Trump bump is, it's the pause that refreshes here this week. Considering that, coming out of the gate, the S&P 500 was up large, the Dow was up 1,500 points on, the following day after the election on November 6th. It just, we had this parabolic move higher here on pure euphoria about the notion of lower taxes, lower regulation, pro-business. I mean, all these sentiments just really corralled the animal spirits, and the market really just vaulted higher. So what we're seeing here this week is really, I think, very constructive here. It's quite encouraging. You've got some forces pulling on the market as well here, like you mentioned, with the bond yields moving higher here to 4.5% on the 10-year before backing down a bit on the day. The notion there is that there's going to be a lot of deficit spending here, and there's not been very much discussion about budget discipline coming into the first days of this particular dialogue. So with that said, you've also got Vivek and Elon, that are taking on this government efficiency role here, where they think they can cut, upwards of $2 trillion out of the budget right out of the gate. And they've already earmarked about $500 billion worth of fraud. That to me is tremendously good news from the standpoint of it leads to what I believe will be a psychological sentiment shift for the bond market here. Hopefully going forward, we had good inflation numbers this week here, where both the CPI and PPI came in at 0.2% higher, running at an annual rate of roughly 2.6%. We have a cumulative inflation rate here of 20% over the last 4 years, but inflation is slowing. And at the same time, if we can, get government spending under control and actually dial back, where we are looking toward balancing the budget and actually starting to look at reducing the deficit, that will be tremendous news for the dollar. It'll be good news for the bond market. And this, I think you'll see with inflation still trying to trend lower, that we could see a very strong seismic shift here in the bond market here coming into the first quarter of next year. And this is all out there for play, but we'll see if that really does take place. The S&P 500 had a 5% move here, off that 5,700 area before the election. It traded up to 6,000. It's pulled back here 2.5%. It's a 50% textbook pullback. And right at the 20-day moving average here, I expect this market to gather itself here next week and move higher. This is a seasonal, a strong seasonal time of the year to be long the stock market. And we had good retail numbers here come out today. And we also had a very strong New York Empire Index here, which came in at 31.2, which for that reading here is it's the highest reading in nearly 3 years. So it definitely underscores what I'm saying is like maybe not so fast on further rate cuts here because the economy's on pretty decent footing. That's good news. It doesn't bring mortgage rates down, but it does show that a soft landing is in store here. And again, with all this taking place here, with this quote unquote dream team taking shape in Washington, I'm encouraged by what I'm seeing here from the standpoint of very proactive measures to bring the economy to a higher rate of growth, bringing inflation down, and also attacking the budget deficit as we move into the new year, Frank.
On the air live with investment expert Bryan Perry, the chief investment strategist and portfolio manager at Mint Asset Management at mintassetmanagement.com. Thank you, as always, for that very thoughtful analysis here, Bryan Perry. And last but not least, cryptos have rallied significantly since President Trump's election, and we see Bitcoin bouncing around this week, back above 91,000 here, I just noticed, and Ethereum still above 3,000, and Doge, which is something we've been hearing more about lately in the context of this acronym, Department of Government Efficiency, that, as you mentioned, Elon Musk and Vivek will be heading up. Doge coin made a move this week, right now hovering at around 38 cents. So as we learned this week, people still love to hate crypto. Of course, it's very loved, too, when it goes up, but not so much when it goes down. What are your thoughts about what happened in the crypto space in the last couple of weeks?
Yes, well, we've been seeing crypto in a really tight range here for many, many weeks and months. And now the breakout did take place, Frank. And as you know, after many shows, I'm talking about 80,000 as my year-end target for Bitcoin. It blew through that like a hot knife through butter. Yep. And now we're at 91,000 here, and I think we're going to see 100,000 here by the end of the year, maybe well before that. The notion of having this new asset class that's going to be embraced by the Trump administration, and with being maybe where there's some regulatory oversight, which is actually positive, because what it does, it brings in institutional fund flows into an asset class where there's rules, and because we've all been through FTX and we've been through Binance and there's been a lot of turmoil in the crypto world. There's been a lot of hacking where, wallets have been just, stolen, and where millions of dollars and billions of dollars actually in cryptocurrencies have been just disappeared. So if this becomes a more regulated market, a more secure market, and a more oversight market by the feds, where there's actually they're looking for alternative asset classes, then I think that as long and the dollar's held up well against this in addition, which is very surprising. That this is actually very bullish for not just Bitcoin, but for the rest of the crypto coins as well. So, XRP had a huge move this week here. Cardano was one that Solana is one I've been talking up as and that's made it a fresh highs here for the last. So it's across the board that there's brand new enthusiasm and oxygen in the crypto space, and it's exciting because people want to know that they can invest in a new asset class where there's real upside potential.
From blockchain to analog gold chain, we see the price of gold taking a hit this week and down to around 2,567 and change. Silver also pulling back a bit, still above $30 an ounce, down 23 cents to 30.33. This in the face of a stronger dollar, and now with the new leadership heading to Washington, perhaps more certainty on geopolitical matters. What do you see ahead for both gold and silver here?
Well, you just hit on the nail on the head, Frank. The idea that the Trump administration is going to be, play hardball with China, with Iran, with any of our adversaries out there, is one reason why you're seeing some of the premium come out of gold, because there's been a geopolitical premium built into gold here for some time, and that not only and the dollar has rallied, certainly against other currencies around the world here under what I'm talking about earlier is just. It is America first. And so therefore, you've got this trade that's on right now, which is, kind of de-risking the hedging, if you will, even though Bitcoin has gone up because now it's become kind of open season for this new asset class. Gold has been the place where central banks and retail and institutional investors have really parked their hedging money. I am a believer, though, that gold, this pullback here in the 2570 area, is a good buy point here. People should be looking at it. This is a nice pullback because deficit spending really, no one's resolved this or solved this. And I think that there's going to be another rally in gold here that takes it back to new all-time highs. Central banks are still, in a world of hurt. And so in China especially, their numbers, they've got a massive property crisis over there, and they're in a deficit way. So I think it's a good time for people to look at gold on this correction.
All right, here we are heading into the holiday season. The retail sales report, October retail sales topped analyst estimates as we head into the holiday season, and we've seen already that big kickoff to the holiday season in Beverly Hills last night, and more to come at the Grove and other shopping destinations here in Southern California. What do you see ahead for the retailers here as we launch into the holiday season here? It is already November 15th.
Well, I just have one name that I'm really starting to buy into and full disclosure for men asset management clients is Amazon. Amazon here broke out. They had a great quarter. The stock ran, from like 190 to 210, 215 in that area, and has in this past week here has really formed a very beautiful chart. It got up to a new high of 215.90, and today closed at 202.61. This is right back in to the 20-day moving average here, and I would encourage people to look at. They had accelerating sales in their AWS cloud computing business, which is their hottest growth area. But they also today, this week, jumped into the healthcare space in a big way. They've what I love about Amazon is their healthcare area here is something that's really been kind of ignored, and now they're Amazon Healthcare is and they bought a company called One Medical for $3.9 billion, which is now just starting to bear fruit, and it's an integration process for helping the telemed and telehealth experience come to people and as an in-home service to new cities all over the country. So with RFK in here now as the new HHS director, you saw a major shift into what I think is going to be more for retail here. I think Amazon does well there, but at the same time, again, Black Friday, Cyber Monday, they're the lead in all this area here. But technically speaking, they are really breaking out here, and I think the stock has a shot to move from 202 to maybe 250 or somewhere in that area.
You're live with investment expert Brian Perry, and briefly on those drug stocks. RFK Jr., not a fan of weight loss drugs or vaccines. Eli Lilly taking a big hit today, down nearly $40 at $7.46. Amgen down 12 at $2.83. Would you be touching any of those names here?
No, not right now. Those are in a void. I mean, he's clearly a skeptic, of vaccines and all kinds of other things here. And they're going to go after the big pharma in a big way and start, with a blowtorch. And I think that this is really, R&D, government-funded R&D, all kinds of things here. All the biotechs took a hit. Big pharma took a hit. I think you just got to, see where this all lands and then move forward here. We need to have the best, pharmaceuticals in the world and the best therapies and the best, treatments. But at what price? And I think that this is all going to get called into question here because it has been a fat cat land in this area for many decades. And, this is getting reshaped here. And RFK is he's going to make this a mission statement while he's in office. So I think that's something to be careful of here. And not just that, but also anything government related here is going to take a hard look at. We saw this also true, Frank, in aerospace and all the engineering stocks. They really came in hard. The days of the $600 ashtray, on an aircraft carrier are over. So this is a brand new world here, and all the stocks really were part and parcel to why the market pulled back here this week.
All right. At this point, Brian, let me ask you the big question here. At this point, where are you putting money now and/or taking it off the table?
Well, we've got NVIDIA earnings coming up here soon, and all the channel checks are coming in quite bullish right now. A lot of price target hikes in increases coming into their number here next week. And normally, these are very well, schooled analysts that have good inside information that I would think, from their contacts. So the stock here's pulled back from 150 to 142 and change. I'm a buyer of NVIDIA coming into the earnings here. I think they're going to have a blowout quarter and a very strong bullish guidance on their Blackwell chips and demand for data center build outs. So that looks good. Also, I'm buying Costco here. Costco broke out. It fabulous monthly sales numbers here, and Americans are still value shopping here because based on inflation, it's still tough out there. So, Costco broke out, and I think at 907 here, it was down today, to about 2% almost. Take a look at Costco here. The technical looks great and goes higher. And again, Amazon looks good here. Also, Aristonet. You want to look at also the AI infrastructure stocks here, from my viewpoint, that are offering the build outs of these data centers here. And Aristonet is one of the bigger, networking companies here that has been stealing market share from Cisco for years. So ANET has been pulling back here from the mid 400s down, turning around 375. That looks attractive to me as well. And I've been also picking away at some of the utilities here because those are growth companies here that have to provide, expanded energy demand for these data centers here. And one of them is NRG Energy, symbols NRG. It's a big utility provider here in Texas, which is, migration is very strong in Texas. So NRG, Wells Fargo raised their price target to 150. The stock trades at 91. So I've been buying that here this week as well. I'm coming off. It's just, again, all things related to the government right now because the government's going to get more efficient, smaller, leaner, meaner, but it's going to require that a lot of these companies here are going to be, their contracts are going to be bid lower and they're going to be bringing in less top and bottom line results here. So that's a general off trade in my view for the time being, Frank, until we know more about just how hardcore, Elon and Vivek are going to get with this, downsizing the federal government.
Terrific, Brian. Well, thanks very much for joining us live here this afternoon with that thorough assessment here. Coming off the election rally, taking a breather this week, and more exciting times to come. Investment expert Brian Perry, Chief Investment Strategist and Portfolio Manager at Mint Asset Management at mintassetmanagement.com. Also author of the 25% Cash Machine. Brian, it's always great to have you with us. We wish you a great weekend and look forward to speaking with you again very soon.
Yeah, all said and done, Frank. I think it's important that investors take a hard look. It's a good time of the year to buy the dip, and we're in a good place. Okay? Have a great week.
Terrific. You too. Thank you very much, Brian. And let's get right out to the freeways now on 790 KABC.
Living it up, oh yeah. Friday night. Living it up,
Mottek On Money continues here in 790 KABC. Good afternoon. Bitcoin bouncing back Live it up on this one here at 91,075 at the moment. Looks like Ethereum pulling back at 3,087, that is, and Doge at the moment at 38 cents. The cryptos, of course, have seen a lot of action lately since the election of President Trump. It looks like this week the stock market started the week off strong with record highs following the election earlier this month, but worries about inflation and heightened valuations cooled the rally down this week. All three of the major averages pulling back, with the Dow down 1.2%, the S&P 500 and NASDAQ each recording their biggest weekly drop since September after the S&P 500 shed 2.1%, the NASDAQ down 3.2% for the week. Indexes, though, still in the green since Election Day, November 5th. All four of the indexes still up about 1% since last Tuesday, but noticeable downstretch across the board this week. We did get the retail sales report earlier today, coming in stronger than expected, which is good news for the economy, but reinforces the idea that the Fed might not be as aggressive as some on Wall Street had hoped in cutting the benchmark short-term interest rates. And the latest comments from Fed Chairman Jerome Powell also kind of pouring cold water on the markets this week. The Dow down 306 points at the bell today. We're back to 43,445. The S&P 500 down 78 at 5,871. The NASDAQ down 427 at 18,680. Price of gold pulling back this week as well, down 540 today at 2,567 and change. Silver down 23 cents at 30.33. The price of oil also pulling back for the week. The volatility index, the VIX index, the so-called Wall Street Fear Index, spiking today by 13%. And NVIDIA, the magnificent one, pulling back nearly 5 today at 141.98. Apple down to 3 and change to 225. Eli Lilly among the casualties in the drug sector today, down 38 and change to 746.20. Amgen down $12 and change to 283.61. And now the latest news here on 790 KBC. Mottek On Money continues here. Let's get it into gear now and talk cars. What does the second Trump administration mean for your car? Electric vehicles, gas-powered vehicles. The presidency is expected to reshape the auto industry. And let's bring in our go-to car expert now, Lauren Fix, editor-in-chief of Car Coach and the co-host of the Total Car Score podcast. Lauren, love your posting here on social media where you do tackle the question how the presidential election will reshape the auto industry. Give us your impressions of how things are playing out so far.
Well, I think one of the things we know 100% for sure is that the electric vehicle mandate, the $7,500 tax credit, was going to go away. Even Elon Musk was supporting that, which I'm surprised. But you got to remember, he's the leader in the segment. And how do you get rid of your competition? No more tax credit, still offering his cars at a very fair price. And I think that Tesla won't get hurt at all, but taking away that EV mandate is going to be a big thing for a lot of states, because 17 states were following California. And the $7,500 tax credit is really not the way to get people to buy cars. The idea is let the free market reign. If you want one, great product available from a lot of different brands, and you have choices. That's the best way to have success in electric vehicles.
And it appeared Elon Musk was being dissed in the current administration. Here's an American brand, pretty much the number one car in the world at this point, right? And not really being acknowledged much in Washington at all until now.
That's true. I'm surprised that Tesla was basically dissed, as you say, because there really are only 3 American brands right now. You got Ford, GM, and Tesla, where Stellantis has now become a Belgian car company, so there really is a difference. And the fact that Tesla has jobs here, they have manufacturing here, they're building batteries here, cars here. They're also doing it in China, but I think it's a huge plus. I was just last week, actually earlier this week, at the BMW factory in Spartanburg, South Carolina, and that is the largest BMW plant in the world, and they sell all of their SUVs, come from there. Anywhere that you sell them except for China, those SUVs are made here in the USA for jobs, and that's what President Trump wants to do. They want more manufacturing here, and you can export it if you want, but they don't want you to import from other countries, especially China.
That is very significant. And as far as Elon Musk being right there next to President Trump here at Mar-a-Lago and at all the big events lately, certainly his influence is pretty massive, it seems. So do you think Tesla will remain even bigger than it will get even bigger than it is and perhaps blow out others who are struggling at this point in the EV world?
Yeah, I think that Tesla's still going to remain the one who blazed the trail. He still has the largest market segment for electric vehicles. A lot of people don't like going to dealers. They want to just order it online or at the mall and pick it up. Not everybody likes that. Some people like to have that dealership relationship, which I personally like. But the idea is that there's options for customers, and you're going to see a lot now more of people going to that online buying of cars. You see that with Rivian. Polestar has it. You have Scout coming online in 26 that will also be like that as well.
All right, and looks like California leading the charge, the EV charge, so to speak. And what do you think is going to happen here under President Trump? Will these mandates essentially be eased, and will consumers have the choice once again of either electric or gas-powered vehicles?
Well, the mandate's definitely going to be lifted, that we know. But getting California on board, there's only a couple ways to do this. Either one, Gavin Newsom is done with his term and the next governor comes in and changes things, or the federal government says, well, we just won't fund your state with federal support any longer, and you'll be on your own. And we already know that California's in financial trouble. So what will end up happening is he'll eventually have to bend to the will of the president. And they do need to eliminate that California Air Research Board, because right now one state's making the rules for the other 49, and that should not be the case. They've already, as of January 1st, I just posted this today, they're going to make it so you can't buy motorhomes anymore. So anyone who thinks, I got to bring the whole family on a vacation, bring the dogs and the kids, everything, you're not going to be able to do that because it has to be electric. And a 40,000-pound electric vehicle is not going to go anywhere. You'll spend more time charging than you do driving. And so this are some of the issues that are going to have to be addressed. And I'm hoping once they announce whoever the next Department of Transportation lead is, that person will address some of those type of issues, as well as kill switches and speed limiters and all the crazy things that California is trying to put into place.
On there live with Lauren Fix, editor-in-chief of Car Coach and the co-host of the Total Car Score podcast. And people are saying, wait, what? California set to end motorhomes? Repeat that, Lauren, what you just said, and how's that going to work, and what are they planning here?
That just literally went through in August, and very creatively done at night, typically how they pass things when no one's looking. In the middle of August, they passed a law, the California Advanced Clean Air Trucks, and it's called the ACT regulation, and it aims to promote zero-emissions vehicles. But what it's doing is putting a near-total ban on motorhome sales, not just in California, but it'll apply to Oregon, Washington State, New York, New Jersey, and Massachusetts. It'll also then, in 26, add on Vermont, Colorado, New Mexico, and Rhode Island and Maryland. And the problem with this is they're also going to make those people who have older motorhomes, maybe yours is 2 years old, they're going to make you do a smog test twice a year, and it's going to cost about $500 each time. It's going to make it unaffordable for anyone to own a motorhome, and a lot of people like them. Some people actually live in their motorhomes. So if you're taking away that RV life from someone who chooses to go that route, that's going to be a problem. There's going to be a lot of pushback from consumers, and no one knows about it because for some reason the RV industry did not take this to the mainstream media, so I'm doing it.
Wow, that is very, very big news. So in practice, how's that going to work? No sales of motorhomes in California, new or used, or what's going to happen?
No, not if it's gasoline or diesel powered. They're not going to let you sell it, which means you have to sell it to another state. But if eventually 17 states are on board, you can't even drive cross country from California to New York, because you're going to have to cross through states like Colorado, and if you don't have one of their permits, they're going to fine you for that. So they're going to try and tax you going through the state as well as if you live in that state. So there's a lot of things that are arms off of this, ways to grab more of your money. This is a problem because if you think, okay, well, I don't own a motorhome, what's the big deal? Well, here's the big deal. There's a lot of large RV dealers with, Prevosts and big push-outs and some of these all-in-one campers, and there's smaller ones as well. They're very expensive. And a lot of these dealers, not just in California, I know there's one that just closed in Los Angeles, but they're all up and down the main 95. Think of Camping World. I mean, this is a huge corporation, and the impact is $10 billion is the industry right now. Most of it is built in Elkhart, Indiana, so it's going to impact not just Indiana, which is not part of this, but it's going to impact California, all your dealers, it's local jobs, local suppliers, collision shops, repair shops. I mean, it's going to impact a lot. And when people are out of jobs and they have to close down dealerships, that's a big problem. And the investment, I don't know what they're going to do because you can't go to another state because you aren't going to be able to drive it in every state. So it certainly creates a lot of limitations, and I think this is something that President Trump's going to have to address pretty quickly, or whoever's in charge of the Department of Transportation or the Energy Department.
See it tonight, read about it tomorrow, but hear it now on Mottek On Money on 790 KABC. Lauren, thank you very much for bringing that to our attention today. Lauren Fix, editor-in-chief of Car Coach and the co-host of the Total Car Score podcast. Thank you very much for joining us live here this afternoon.
Thank you.
Out to the freeways we go now on 790 KBC. It's Frank Mottek here. Did you know that for more than 10,000 years, gold has been the greatest store of value and considered a safe haven asset to preserve your wealth? Now, with the U.S. debt at more than $35 trillion and climbing, not to mention the Biden administration getting us involved in costly wars, developing the digital dollar, central bank digital currency, and inflation spiraling out of control, it's more critical now than ever before to safeguard your assets, like your cash savings and retirement accounts, with physical gold. Opening a gold IRA is one of the best ways to secure your wealth and create a stable financial future. Stop worrying about your retirement in the market and cash savings in the bank. Feel confident, prepared, and in control with physical gold and, yes, silver. Give Joe Morgan a call at 1-800-753-8534. Mention Frank Mottek, and you could get $1,000 worth of silver with a qualifying purchase. Call 1-800-753-8534 or visit UnitedGoldGroup.com. Mottek On Money continues here in 790 KABC. Get in line. Pink's, the most famous hot dog place in Los Angeles, celebrating a big anniversary this month. The iconic hot dog stand is a must-see for visitors from around the world as well as locals. Pink's, of course, at the corner of La Brea and Melrose. And joining us live now is Pink's co-owner, Richard Pink. Richard Pink, thank you very much for taking the call here this afternoon.
Good to talk to you, Frank, as always.
Wonderful to speak with you, especially on this big occasion this month. 85 years there at that location. Take it from the top and tell us about your big anniversary and celebration there.
Well, we have been celebrating Pink's 85 years in business from the time my parents started Pink's with a little push cart back in 1939, and we are still going strong. All these years, still owned and operated by the Pink family. And in order to celebrate, we've been selling chili dogs for charity. For 5 days, we were selling our chili dogs for 85 cents for 85 minutes, starting at 8:05 p.m. And I have to say, each night we gave away $5,000 in charity contributions to various charities based on the celebrities that came to join us in this celebration, starting off with Mayor Bass and Katie Yaroslavsky, who came to Pink's on November 8th. And then we had George Lopez and his daughter Mayan Lopez, who served Pink's and worked behind the counter and celebrated with us. Then we had this famous comedian, Fluffy, Gabriel Iglesias, who came. And then on the final night, we had Henry Winkler, who actually joined us at our 75th anniversary and said, I got to make a reappearance. And he came back for our 85th celebration. And, Pink's started with a little push cart back in 1939 when my parents were out of work and they were looking for a job in the newspaper, and they ran across an ad for a hot dog cart. And my mother said to my father, no one's hiring us. And they were in their late 20s at the time. Why don't we buy this push cart and maybe we'll go in the hot dog business, because everybody, has to eat. Everybody likes hot dogs. My dad asked my mom, well, how much is the cart? She said, well, it says here it's $50. And my dad said, where are we going to get the $50? And my grandmother loaned them the $50 to buy that cart. And my mother went and bought that cart and wheeled it all the way up La Cienega, all the way up Melrose to the corner of La Brea and Melrose, where there was a site available for lease, which they rented for $15 a month. And they put up a sign, hot dogs 10 cents, Cokes a nickel. And there was no electricity on that site. And my parents had to go out and buy a 100-yard extension cord in order to plug into a friendly neighbor's outlet to fire up that hot dog cart in 1939. 2 years later, the landlord raised their rent 67% to $25 a month. I know that doesn't sound like much now, but boy, that was too much for them back in 1941. And because hot dogs were still selling for 10 cents. So Fortunately, across the street, there was a Bank of America branch, and they went over to the branch manager and they said, I think we can buy this property because we can't afford to rent it. Can you loan us some money? He says, well, what kind of collateral do you have? And they said, we don't have any collateral. We have a great hot dog, but we don't own anything. And he said, well, I'll tell you what, I don't want you to move because I eat lunch there every day. I love your hot dogs. So he said, I'm going to take a risk on the two of you, loan you the money necessary to buy that location. And that's what they did in 1941. And they still had the cart. And that went for another 5 years until 1946 when they built the hot dog stand that you see there today. And I have to tell you, you come to Pink's, that hot dog and that chili that you would have on that chili dog, okay, that's the same recipe we started with. It's the same chili recipe we started with all that time, and it's the same thing. So totally consistent. And that's the snap of the hot dog when you bite into it. It's so juicy. And most of our employees have been with us 25 to 30 years, all at that same location at La Brea and Melrose. And so I have to say, you know, my parents worked from dawn to exhaustion, and they transferred the business to the family. My sister Beverly, my wife Gloria, and myself, and we're carrying on the tradition. And it's the same staff, as I say, that we've had for so many years. And it's almost like the longest running show in Hollywood. I have to say, you come there, you smell the hot dogs being cooked, you smell the buns wafting through the air, the smell, and people line up and they come in now, not just locally, but from all over the world because they read about us or hear about us on cable television and various
790
other
KBC.
social media. And on KBC,
That's right.
and thank you very much, Frank.
We're on the air live with the co-owner of Pink's, the one and only Richard Pink, and we honor the memory of your parents who brought the world Pink's 85 years ago. And I want to salute you in a big way. You give back so much to the community as you and your wife are tremendous philanthropists, and to do this in honor of so many charities. I know you support the Union Rescue Mission, for example, in downtown Los Angeles, the Concern Foundation for Cancer Research, and you do it. You do everything right from the heart, and you do it in such a big way. And so thank you very much on behalf of the entire community for doing all that.
Thank you, Frank. We appreciate it. My parents started very humbly, and they told us, look, the community supported you for all these years. You give back to that community because that's who you owe. Whatever success we have, we owe to the local community, and we're so grateful.
Thank you very much. And would love to talk more, but we'll have to stop there. Look forward to getting your views on business and certainly the hot dog. We always relish these conversations here, Richard, and I can't wait to get over there now. You made me very hungry here during this conversation. So, Richard Pink, all the best to you, and congratulations on the 85th anniversary of Pink's at the corner of La Brea and Melrose. Richard Pink live with us here on Mottek On Money on 790 KBC.